Welcome to Ahead of the Herd. Today we delve into the performance of the U.S. economy, focusing on a troubling trend that has emerged over recent months. In the first quarter of the year, the performance of the U.S. economy was the worst in 3 years. The GDP growth at the end of President Biden's administration stood at 2.4%. However, in the first quarter under President Trump's administration, there was a contraction of 0.3%. During March, U.S. consumer spending rose by 0.7%, suggesting a solid gain. However, this increase might be attributed to consumers stocking up in anticipation of tariffs imposed by the Trump administration. The Personal Consumption Expenditures Price Index showed a 2.3% rise from a year earlier, representing a slowdown in inflation compared to previous months. Yet, it's important to note that this data predates the full effect of Trump's tariffs. Oil prices have fallen sharply as demand diminishes, signaling a possible shrinkage in the U.S. economy. The uptick in consumer spending reflects consumers and businesses stockpiling prior to the tariff implementation and leads one to believe if consumers think the economy is stalling, will they quit spending? China has begun canceling buying key U.S. agricultural exports, including pork, grains, cotton, and soybeans, leading many farmers to face dire circumstances. The New York Post has referred to this situation as a full-blown agricultural crisis. Renowned economist Stephen Roach warns of a stagflation for the ages, noting that current global trade disruptions far exceed those seen during the pandemic. Meanwhile, Frank Holmes believes investors think gold is a classic fear trade that retail investors are still sorely underexposed to. A stagflationary environment, where slowing economic growth is coupled with high inflation, looms large. An official recession declaration might be just 2 months away, with decelerating growth likely leading to increased job losses. Gold historically outperforms other asset classes amid economic stagnation and inflation. In fact, during stagflationary periods, gold returned an average of 32.2%, significantly outperforming U.S. Treasury bonds and equities. As we assess these developments, the question remains, is the U.S. heading towards stagflation and recession? The months ahead will surely provide more clarity.